Okay, so here we are at the MarketSmith software. Now, MarketSmith is published by Investors Business Daily, who was founded by William O'Neill, author of How to Make Money in Stocks. Great book, I highly recommend it. And it incorporates a lot of his research into the scanning filters themselves. Now, there are a lot of bells and whistles in the software here. It's a brilliant tool. I will not trade without it, and I cannot trade without it because it's made me very profitable. But I'm not going to get into all the details. We'll save that for another video. What I want to do with you here today is build a scan that will find the strongest and the safest stocks trading in the market today. So to do that, let's first open up the scanning editor, and then I am going to build a new screen, a new stock screen. So let's just name this the SSS screen, SSS standing for safe, strong stocks. And I'm going to do a variety of things here as I fill out the filters of this scan, and I'll explain them as I go. The first thing I like to do is go to General Stock Criteria, and I want to make sure that we are not going to be filtering out any ETFs. ETFs are great. They're no problem trading ETFs, but we just want to focus on stocks in this particular scan. I also want the stocks that come through our filter to be optionable. So, well, it's taking a little while to update here. Okay, and it has now updated, and you can see over here on the right that out of the database of 8,071 stocks, with those two filters in place, no ETFs and only optionable stocks, we're down to about 3,500 stocks. Now, the next thing I want to do is go over to price and volume. I prefer to trade higher priced stocks rather than low stocks, although I do trade penny stocks, I do trade small caps. But for this particular screen, I'm looking for stocks that are priced at least $40 and above. Some of the best stocks today are trading above $200, $300, $400. Tesla is up above $800. And if you confine yourself to small price stocks, you're going to miss out on a lot of the great growth companies. So we put in a price filter of $40. That gets us down to 13.92. And then I'm going to scroll down here to the volume filters. Number 21 describes the volume over average daily share volume over the past 50 days on average. And I'm going to type in 500. So that puts me into only stocks that are trading at least 500,000 shares per day over the past 50 days. And with that in place, we are down to roughly 1 out of every 10 stocks has passed through our filters. We're down to 808. Okay, now we need to go to the Smart Select ratings. These are the proprietary ratings that you will only find in the MarketSmith software. They are based on the research of William O'Neill in Investment Business Daily. And if you're familiar with the paper Investment Business Daily or their online service, then you're very familiar with these ratings. I'm going to put in an EPS rating. Now, an EPS rating on a scale of 1 to 99 indicates just how strong this company is, not only in terms of how much money it's making, or not making, because plenty of great growth companies aren't making any profits just yet. But more importantly, it's determining how fast the earnings are growing or how fast the deficit is dwindling, right? If you're losing money, but you're losing less money now than you were a year ago, you're actually growing earnings, right? You understand that. It also looks at not only year on year, but also quarter on quarter. And then thirdly, it looks at accelerated earnings growth over the past 3 quarters. So we're looking for stocks that not only have a great track record in terms of their earnings growth, but they also have accelerating earnings over the last 3 quarters. Those are the stocks that we really want to focus on. I'm going to put in here a minimum of 90. So I want the stocks that pass through my filter to have at least an EPS score in MarketSmith of 90 or better. And that gets us down to 158 stocks. So that really weeded out quite a few. The next thing I want to put in is a relative strength rating. That's number 2 here, relative strength, RS. I'm going to be a bit lenient on this one. We don't want stocks that are just shooting to the moon. We want stocks that still have some upside room. So I'm going to put this number at 70 and see how far that whittles out our number of stocks. So that gets us down to 69 stocks. So we're doing better. We're starting to get down to a reasonable number of stocks that we can do our further analysis on. The third thing and the final thing on this page that I'm going to put in is the SMR rating. Now this is, again, proprietary to Investors Business Daily. SMR stands for 3 things. Sales, which is to say sales growth, not only over the last year, not only over the last quarter, but also increasing, accelerating sales growth over the last 3 quarters. The second thing is margins. So we want to see gross operating and profit margins, if they have a profit margin. We want to see those starting to grow. Not just that they have solid margins relative to their peers in the industry, because this is very industry specific, right? A software company has big margins, a retail company has very small margins. So relative to peers, we want to make sure that the companies we are filtering out have very strong margins. And then return on equity. Return on equity is one of the things I use, not only margins, but one of the things I use to determine safety of a stock is return on equity. Margins, of course, indicate, relative to peers, indicate strong pricing power. So kind of a moat, right, around the product or the service that is being offered by this company. So strong that they can offer higher prices and get people to pay for them. That's the margin. And then return on equity indicates efficient management, because you're only going to get a very strong return on equity, return on the cash, the assets, the hard assets that the company has. You're only going to get that if the company is well managed. So I want strong management in my companies. Now this is on a scale from A to E, E being the worst, A being the best. I'm going to single out only companies that qualify for an A or a B in the SMR category. That gets us down to 67. So that only filtered out 2 companies, but that's fine. The last thing that I'm going to input, and this is probably the most important thing that I'm going to input, is found under the Earnings tab. And I need to scroll down here toward the bottom. And it is the EPS, earnings per share, estimate change for the current year, and then EPS estimate percentage change for next year. Now, what this means is that I'm going to input a 1 here and a 1 here, and we'll see if that leaves us with any companies to work with. Sometimes it filters everybody out, in which case we can fiddle a little bit with our, not bad at all. Okay, well, 62 after the EPS estimate for the current year, and then we're down to 50 for the estimates for next year. What this means is that the company has decided that their former estimates that were stated in the last conference call weren't quite robust enough. The company's had a very good quarter, so they come out with a conference call and they say, look, we are projecting ahead much better earnings than we had expected. So we are now going to revise our earnings estimates upwards. We're going to say to everybody gathered, to the media that are gathered, listening to this conference call, that we are going to make more money than we thought. We are revising upwards. We are we're scratching the old estimate. We're giving you a new estimate, and as long as it's above 1, it indicates that they've made that estimate revision in a positive direction. They're moving upwards rather than downwards. That's exactly what we want to see. If you're familiar with the research of Len Zaks, who's the founder of Zaks Investment Research, you'll know that the earnings estimate revision of all the fundamental metrics that there are, right? All the valuation metrics, all the growth metrics, If you take that one factor, earnings estimate revisions, both for this year and next year, it is the strongest fundamental metric correlated to forward price increase. Now, just in layman's terms, what that means is when the company or when an analyst covering the company says, hey, we're going to make more money, this company is going to make more money than we thought, we need to revise our estimates upward, that stock is likely to do very well over the next quarter. Of all the other changes in fundamental metrics that there are, this is the one that is most strongly correlated to forward price increase. So we definitely want to have both of those in our scan. All right, so let's take a look at our scan results. We have 50 stocks, which is not a bad list to work with. That's a pretty decent watch list. And let's start taking a look. Now, we've got all the ticker symbols and their names of the company down here. We've got their current price. We've got how they're trading today. We've got the volume today. There are several ways that we can rate these companies or prioritize these companies, and this will bring the strongest of the strong stocks to the very top of our list. One of the easiest ways to do that is to go over here to the comp rating. You see that? The comprehensive rating, which is the IBD's way, or the MarketSmith's way of taking all of the fundamental data, you know, the earnings comp, the earnings metric, the sales metric, the margins metric, the return on equity, everything, the relative strength. And let's put it all into one single number, that is the comp rating. And it goes all the way up to 99. So if we click on that, we should bring a few 99s to the top of the list, and in fact we have. So there's 10 right there. We've got about 10 or 12 ranked at 99 and several at 98. So we've got a lot of really, really top companies here to look at. So then the next thing we want to do is scroll through some charts, and we'll see if any of these are at or near a buy point. And one of the nice things about MarketSmith is that it gives us a range that you can mark, not for every stock, but for most stocks. It will give you a range where you can mark your buys. It will give you a place where you should put a stop loss in case the trade goes against you. It gives you a place where you can take some profits if the trade works in your favor. You can see for PerkinElmer, a medtech firm that I'm not very familiar with, but it recently broke out over here. You can see above the 149.95 pivot and continued on, confirming that breakout for a couple of days. It's giving a little bit of that back today. The market's been a little bit squirrely today, kind of on the weaker side. So it's giving a little bit of that back today, but it's very close to the buy zone. That's this little blue box right here. Your stop loss is down here around the 50-period moving average, and your target price, your profit price, is up here. So not a bad looking chart. I would give that a couple of days to see if it filters out. Lam Research is a stock that we've been in this last week. It's giving back some of that today. It got a downgrade, unfortunately, but we were able to take some profits early off the table this morning. And it's printing a nice little cup here with a breakout above the 516.65 pivot. It is kind of on the late stage of its rally. The best entry was back here under 400. So, you know, from 382 up to 516, that's a very, very nice run indeed. It's pretty much run its course, I think, for now. We'll put that on the side. Cadence Design System, always a perennial favorite of those in the chip design space. And it is just coming out of a buy zone area. So it's not really a buyable stock right now, but we'll put that on the side. Teradyne has been on a real tear lately, pun intended. The best entry was down here with this little cup and handle. You can see how the market or the pattern recognition software marked out this little cup and handle, and with a breakout above 93.17 pivot. Went from 93.17 up to 122, pulled back into the 20-period moving average, and it's now trading today around 132. That's a beautiful trade, right? That's about a 40% move right there off the MarketSmith buy signal. A lot of these have already made their big moves because, of course, the NASDAQ 100 is trading up at around all-time highs. So kind of difficult to find a stock, especially at the 99 comp level, that would give us a nice entry, a safer entry, one where we're not buying the top so much of a move. But if we scroll down through the list, you can see, now here's one that is coiling up, nice high tight base right under 100. Tried to break out today, couldn't quite make it. Market is not quite cooperating, but that would be one you would put on your watch list. Monolithic Power Systems also broke out not too long ago. You can see it played around with the buy zone for several days and is now above the buy zone, confirming that breakout on the way to the profit target up here. We are in Etsy. We've been in Etsy for quite some time. It's making a nice little dip after setting new all-time highs. We got in Etsy back here on this buy signal. We got stopped out. We got back in again, and we're now in a profitable trade. So it's setting up quite nicely here on the pullback. You've got oversold stochastics, and it's one of our favorite retail plays. PayPal, we also have a position in PayPal, which gave us a very nice buy signal back here when it was in the buy zone. And we loaded up there, made a nice run, pulled back into the 20, and it looks like it's making another nice run again. Trade Desk is one that we recently put a put spread on, a bullish put spread, because it has pulled back very sharply off of its all-time highs. There's not much going on here technically in terms of patterns, but just from the for a nice put spread, lots of rich premium in the puts, and you've got some support back here with this gap. All kinds of good stuff, and of course it's one of the top companies. Floor & Decor is one that I have some of my clients in as it's breaking out to new all-time highs. Okay, so I'll let you go here, but I just wanted to show you that this list of stocks is a great place to start your day-to-day research for new trades. Using the MarketSmith software, you can see how easy it is to program in a robust screen like this, and it'll give you a nice, good, healthy list of stocks. You can tailor that, of course, to fit your own particular trading approach, and then you would use the software itself to locate buy prices, stop prices, and target prices. All right, that's it for me today, guys. We'll see you soon. Bye now.